Hi, everybody. Dale Pinkert, TradeGateHub.com. Invite everyone to come here and share your ideas. So if you go back and you've been following me for a while, I was looking for one more high in the Dixie, and we got it at 97.40. And form is saying it's enough for it to be a top. What kept me out of getting long were 4-hour relative strength readings over 80. And markets normally don't top under those circumstances. But I can say one thing for sure about, well, you can't say anything for sure in this business, but this strength that we're getting in euro, if the ECB disappoints and we get one more low, and I think it's possible, because we're talking about a major low developing. And here I see one drive, and here I see another drive, and sometimes two are enough, and it's positive that we're back over 1280. But the trader instinct in me says that people are front running the NFP. If you saw the ADP today, it was very disappointing. A loss, minus 300, I believe was the number. All the Fed speak this week is prepping the market for a weak number. It was right in the middle of Omicron, and people weren't doing much besides, staying home in fear and watching their life just, melt away, hiding out for 2 years. So I don't know about you guys, but I'm pretty tired of it. So really with short-term indicators that didn't line up. So this could have been the bottom. And at the minimum, we'll see what happens if we get a pullback here on the ECB back to 112. It's got to hold 112 on a pullback. Otherwise, I still think we have another low. What must be disappointing to precious metal bulls is with this kind of rally that we've had in the euro and dollar weakness, gold certainly has not recovered the drubbing it took last week when I was talking about shorting the market here. And I'm not saying that gold can't continue a bear market rally, but this too does not look like a bottom to me. And the silver action with the weak dollar is somewhat disappointing too. You guys know, if you've been listening to me for a while, I'm looking for about 1720 in the gold. Okay, so that's a silver, but 720 in the gold. Believe that if we take out this low this time back under 1780, in fact, you just measure it, $70 break is going to give you about 1720 or so underneath this 1780 level. We start trading back over 1820, maybe the picture changes, but last week was pretty directional, impulsive, and I still think it's heading lower. I think we're also, today could be the day we get a peak in the crude oil market, and I just want to do a tutorial on it. OPEC announced, made their announcement, they had their meeting, but as you can see on the weekly chart, we're still not confirming the highs. In fact, it's first, second, third divergence, and possibly a 3 drive to a top. What you want to do is wait for your first daily reversal, and we're on the verge of it after being up and spiking to almost 90. What was the high here? 89.70. We're 120 off already, so very possible. Look at this on the 4-hour. All we've been doing is ranging, and this is a market everyone loves in equities. The oil trade, oil-related equities shares have been really outperforming almost everything. Barely gave anything back during the risk-off period that we had in the S&Ps, and so it's crowded. Okay, I believe Mike yesterday said that it's cooked, it's overdone. Also, a tip of the hat to Mike, who said not to get long Starbucks in front of the earnings, and it got hammered. I'm not sure if it came back on the conference call afterwards, but great call not to try and be a hero into earnings. You could have moved in after earnings and Starbucks was sharply lower. Nice call, Mike. So it's still my contention that there's still lower lows coming in gold and silver, and I'm still being patient for it. I still think we'll see 20 handle on silver and 1730, 1720 handle on gold. If you want to be short, I still think that yields are not done, even though they've been hesitating up here. There's nothing that bearish that I see here, except that, you know, we're consolidating. Maybe we're going to have another test of the 170 level, but when you look at yields here, it's almost like a little triangle that you have developing here, 170 being key. Closes under 170 would change the picture for me. I still think we're going to head up towards 210. In fact, you just take the range of 190 and the floor of 170, which are 20 bips, and you tack it on top of a breakout of the triangle, and that's going to give you 207, 208. Still looking for it. The big surprise Friday would be a strong number, because all the Fed governors have been out talking about, you know, prepping the market for a weak number because of Omicron. So, you know, so far so good for what they're calling. They warned of it, and ADP was very weak. We'll see what the NFP is. If yields can't break on a weak NFP back under 170, I still think 210 is there, and I think that's what could be behind another fall to the downside in gold and silver. And I want to talk about risk here. So we got above this pivot here at 4, but we approached 61.8 here. So even if this market is good, and I have doubts that this low is going to stand, I don't know how long it's going to take it out, but to me, this still smacks of a bear market rally. I would say probably you have to give it at least the 200-day closes over the 200-day are going to look pretty good. That's 46.26, but why can't we pull back to 44.50? Take a look at a 4-hour, 4,400. This is really where the acceleration took place. I don't think you chase this rally up here, and I think there's at least this could just be an ABC for 4, and we could head down, or we could have a more complex correction by having to pull back and then trying to rally one more time. But if you're a bear, this is it. This is the tie between here and 640 on a 61.8 retracement in really a week. It's hard to believe. I know it's Wednesday, but a week ago, Monday, we were here. Okay, we're at 4,200. And that's when I saw the hedge fund lady say, "Oh, I am so relieved that we got this, that, you know, the market held." And this was the day. Okay, so people are relieved. If this is a failing rally here, and this was 600 handles, and if you want to be a bear, you could be looking for 1.618 for wave 3 or C. If that happens before we close over 46.28 from, say, today's high, which was 45.90, then you're talking about 3,600. And I know a lot of people saying that it's bear porn by me looking for this, but I still think there's a shot for 36 would be 1.618, and maybe even this 3,400 level, which is a very important level. That was a high that we had before the COVID crash. So, you know, as terrible as it sounds, we just would be giving up some of these super juiced Fed fiscal stimulus rally that we had during COVID. So in my view, this rally is not a rally that's going to jet to new highs. Now the Fed is taking the punch bowl away, and I think that we need to clean out these lows. And once that happens, we might have a real nice buying opportunity for a rally to new highs. But we have to take it one step at a time. You have to be open to both. So here's what I'm telling people. People are trying to decide, should I buy the dip? Should I sell the rip? I say do both and trade. These volatility is increasing. We haven't had that for a long time. In fact, one of the things to celebrate, even if you're not participating right now on the short side of the dollar, is that, you know what? We're starting to get some action here, and we're starting to get, this was a pretty good rally compared to the comatose period that we were in the euro for months. And then in 1, 2, 3, 4 days, you get a 2-3% rally. In fact, whether this is a low or not, and I'm still, maybe I'm talking my book, think there's another low, and I haven't pulled the trigger on my gold, silver, or miners yet. I think that the miners, I'll get to the GDX, but this is going to be the bull market that you haven't heard that for a while, a bull market in foreign currency. All right. Most of you that are listening to me don't remember that, but we haven't had a real good bull market in euro and cable and Aussie and, you know, the real, you know, that's part of the reason why something else I was talking about was the Brazilian ETF, which is down a little bit today. But, you know, we're clearing some moving averages. I would buy a break in Brazil. In fact, if the dollar makes a new low and Brazil puts in a higher low, that would be a very strong indicator. Okay, so Brazil came out of the hole before the dollar came off. So if the dollar does fail here one more time and you get a pullback like a fib retracement 29, 28, risk the lows, that would be a pretty good buying opportunity in my view. I did want to show the GDX and give you my target so that you're patient about jumping onto the gold share bandwagon. And here's GDX. So, you know, the shares are still underperforming. Yeah, and to me, even though we had this little candle here, this was Friday, and here's our, you know, 3-day bounce this week. To me, it still looks negative. I still think that we could trade possibly down towards 25. This would be something I'd be looking for, some type of return line here. And that's going to come in a little bit above 25, the upper 26s. So from here, you still have about 10%. So 10% in GDX, that's still a big move. I think it's going to tag it. And what I'd like to see is the physical metals down very hard. And the shares start to dig in their heels. Here's a quick look at the junior silvers. I still think that I'll be able to buy SILJ around the 61.8 level. That's 1020, which is, you know, another 10% lower. And here's AG. A lot of people trade first majestic, and maybe we'll see the 78.6 level here. I think these are going to be star performers in 2022 if I'm right about what's going to happen with the dollar, and perhaps rates peaking. Yes, rates peaking at 210 on the 10-year yield and coming back down fairly dramatically. So just want to let you know, Peter's going to be with us tomorrow, and Peter was here when the S&Ps were trading up near the January highs, Peter Goodburn, and he was looking for a sharp correction into the new year, which happened. And here we're starting to fade a little bit here. I actually believe one of the best currencies for risk off right now, it's fairly highly correlated, is the Aussie. I'm short Aussie from today. So, you know, Aussie could correct this or even make a new low. Here's the 4-hour. That's why I didn't buy the Aussie. But, you know, now if we end up probing the lows, we're going to have divergences, not just on the daily, which we had at the bottom, right? See this? But then shorter term TFs will begin to confirm what the daily is saying. And that's when I'm going to be ready to I think Aussie is going to be one of the better long-term buys in fiat currency. I think Aussie and Euro will be my two major candidates to ride the new or continued bear market. And the dollar that I see coming up here, probably the dollar, if it isn't finished, will be finished by the end of this month. So, you know, keep your war chest ready to go. And here we're starting to get this fade in the S&Ps, and keep an eye on this level where all the hedge fund people were so relieved. I think we're going to take it out one more time, flush maybe to 4,100, and the bulls will have to dig in their heels then. So my view is this was the high or A, and this is B and or 3, and then we finish it off down here. And keep an eye on the oil. Intraday, it's diverging dramatically. You know, it's not, it looks like the chart doesn't look as strong as the feeling is in the market. So, I mean, we're grinding here. Look for a reversal day. Maybe you'll get it today with risk off. Perhaps the crude finally capitulates, but there's no reason after this big rally that we had from 62 to 90, almost 30 bucks, why we can't pull back 15 bucks towards 75. So everyone, those are my views. I think this is a bear market rally in S&Ps. And if you notice, everything is kind of moving together, all like one market. And, you know, S&Ps rallied this week, right? We had this, right? It's almost like it's all one market. The Euro did this, pretty similar, right? Look at the S&P rally, look at the Euro rally. Okay, look at the oil rally. It's been the star. So if we start to terminate this rally in equities and risk off comes back into the picture, I do think that there's a shot that the dollar index makes another trip to and above. And at the minimum, we get a failing rally. Don't chase anything, let it come to you. And now silver is turning negative. I know a lot of people want to buy it here at 19, and I understand why. So I know it's hard to be patient and you're afraid you're going to miss a big move. But it's better to be patient and miss part of the move. Doesn't mean you'll miss a whole move if you don't catch the top or the bottom, because once you have confirmation of those moves being underway, then you just time a retracement to enter the market. But I'm waiting for GMO orders in silver and gold. Do you know what GMO orders are? Get me out. And I think that we could even have some GMO orders in NASDAQ acting weaker than S&Ps. Already have a nice little reversal day happening. And look, all NASDAQ did was get back to this spike low. So be careful out there. I'll see everyone tomorrow, same time, same station with Peter Goodburn. We'll get Peter's view and see if he thinks the dollar has peaked or there's one more hurrah left. And we'll also see if he believes this pop that we're getting in risk is a rally to sell. And we'll even touch on some precious metals. And I want to know what's going to outperform when we have a bear market in the dollar, because this week, the euro is definitely outperforming gold. So, you know, I'm curious, are you going to get more bang for your buck being long a fiat against a dollar or a precious metal against a dollar? So I think you could be long both of them, but, you know, I want to know which one's going to lead it. This week, it seems like it's going to be the dollar with the way it acted coming out of the hole here. So good hunting. I'll see you tomorrow for Peter's interview. The only new position I put on today was the short side of Aussie. and it came right off this 50-day, and think we could get one more shot down. So good hunting, and remember, don't just count your pips, count your blessings. See you tomorrow for my interview with Peter Goodburn, and we'll be talking dollar, S&P, metals, and oil as well. This could be a nice short in oil. You just put a stop over the high of the day right here. It's not a huge risk in oil the way it trades. It's $1.20, and perhaps you'll be there for a significant move to the downside, especially if we have risk off here. 80 should be no problem if we take it out. So also be looking for a reversal week, and that's going to be closing under 87.24 would be lower on the week, and the 2-week off number is 84.76. So if you get 84.76 anytime this week, which, you know, there's only a couple of days left, I don't know if that's going to happen, but next week the 2-week off number is going to be 87.24. So it's really going to be much more easy to achieve. But just like I've been telling people in the main chat, if you top pick this, I've been stopped out a few times trying it. So you probe the market, yet protect yourself. Okay, you don't put a trade on unless you know where your stop is. If you don't know where your stop is, you don't put a trade on. And anyone who's telling me they're using mental stops, let me tell you something. Your next stop might be a mental institution using mental stops. So I'll see everyone tomorrow. Let the market come to you. Adios.